You're tuned in to Agriculture Today, and we start our Friday show with a grain market outlook with K State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, starting off our conversation with what are futures looking like?
Well, of course, they're not as high as grain sellers in Kansas and elsewhere would like them to be. We did see uh, corn close yesterday, September corn at 406, so it is above four, and new crop December at 420 and three quarters. Uh, uh, August soybeans 1116 had been lower. New crop bids 1079 and a half. September wheat again immediate post harvest from in most cases here for hard red winter wheat 561 and a half also. So basically you had a little bit up about two to 3 cents for corn, up about 5 cents for the August contract, but up 15 on November, and then September wheat down about 6. And I think a big issue to look at is what the direction of the, I guess, the carry in the market is. When you look at the DEES, pardon me, the corn futures complex, so you've got a carrying charge of from the September to the December contract of just under 5 cents a bushel. From the December to March to you'd be looking at about 4.8 cents, again just under five, over 5 cents in May. So that's a futures complex that's giving farmers the a signal to store grain. So and it's basically telling them from as you're sitting at, by the time you get new crop bids 420 and three quarters, you've got July out at 452, so that's a 30-cent carry. Most farmers in that, when as they see the volatility of markets, they'll say, gosh, in a moving market we can gain that in a day. But I guess as more of a conservative approach to storage, we could put on storage hedges, and as particularly for on farm stored grain that has a little less cost, and make some money on that. So that's something to consider. We have carrying charges also in soybeans at once we get past November, and if anything, they're a little bit stronger up front than for corn. So November harvest beans, their carry from September 24 contract to November is about they're about 2.5 cents a bushel. But beyond that, you're from November to January over 7 cents a bushel. From January to March, about just under five, and about four from out into May. So again, another market that's giving carrying charges. Given what the market knows right now, given its assumptions about what we're going to have for the rest of the summer, how this crop is going to work out, it's giving signals in corn and soybeans to plan to store next year's crop. But there's a lot of uncertainty that has to be dealt with as you work through that. I should also say for wheat, we also have some carries for wheat, hard red winter, from September to December, about just under 6 cents a bushel, about four and two-thirds cents a bushel from December to March 25, about 3.6 cents a bushel out to May. Then of course it drops off into July. So at this point in time, for wheat, as well as these other markets go, we have the presumption of uh, of good crops coming. Not markets really not accounting for a lot of risk. It's thinking, well, gosh, whatever we harvest, we'll have to store it. So it's giving these carrying charges. Uh, when you look at the likelihood of that occurring, that will be largely from here on out a weather dependent event. And I know our colleagues, such as Chip, pardon me, Chip Redmond in-house here at Kansas State, other independent analysts have been talking about forecasts for some pretty hot conditions in August. Here's my take on that. We've been watching these El Nino La Nina transition forecasts for several months now, and what happened as I understand, it's going to view from our climatological weather forecasting brethren, that they that that the time of hotness and dryness, which you thought was going to come originally in July, well, it's now being pushed off into August, September, well, basically into late summer and fall. Yet, yet you've got forecasts of some pretty hot and dry weather coming in. Uh, when I look at the current crop conditions, which I think the market's pretty much paying attention to, because they'll take those crop conditions, put them into yield models, and they're shooting to the high side. 181 bushel corn, 52 bushel soybeans or more, and really the market looks at that based on quantified numbers, especially with algorithmic traders, computerized traders, and gosh, you know, we take the attitude of show me any crop problems. Well, if we do get these forecasts of pretty hot and dry conditions, and not just with El Nino, but other factors all coming into play, then then we look and see what the patterns historically have been for these good to excellent percent ratings for these crops, and do they tend to hold up? And in most years, we tend to see as we go on from July into August, September, a decline in those numbers. So I think, Shelby, that'll be the real issue that we'll be wrestling with here from here on out to out into September. Now I know we've got farmers that have old crop grain and storage, and what do we tell them? How do you tell them to deal with that? Because if they've held grain this long, haven't moved it, then they'll have to cut the fine edge of waiting for some crop risk to give them some better prices, but then not waiting too long and having the market to continue on their current narrative of large crops and then collapse even further into fall. So it just seems to me like a very risky time, very uncertain time. If farmer if we felt better about buying call options, it'd be we tell people, gosh, go ahead and sell your cash and get the best basis situation you can. By the way, there are some pretty good isolated basis bids for corn actually in western Kansas. We have some pretty good, we have positive basis bids, so that's showing the other side of all that. Point is, so going forward, one thing they could do is to sell cash, get a good basis off of it, and then if they think there's a potential for a strong rally, to buy a call option, and then wrestle with the issue of how much they spend for it. I would like to add in that we've tried, at least on my part, we've tried to put together probability-based scenarios where these markets might go for heading off into the rest of the the summer and growing season off into fall. And if you'd like, I can go ahead and talk about those.
Yep, go ahead and tell us about those scenarios,
Okay.
Dan.
So it's a yield-driven issue. We'll have a yield-driven corn market from now into harvest, basically, and probably about a 50% chance, given where we stand right now, that the USDA is right. 181 bushels an acre, no problem. But some would probably say, well, gosh, that's only a 50% chance? I think with the hot, dry weather forecast out there, probably we're looking at either record 177.3 bushel an acre or somewhere between the 181 and the 177, say 179. So I think, my own thinking, you've got like a 3 out of 10 chance that USDA is going to end up with that number being too high. And so plug in 779 bushels an acre, run the math on ending stocks to use, and you go from the USDA's price projection of $4.30 to about $4.55. If through a combination of things being too wet at some places, too hot and dry others, if you end up lower than that, if you only get the old record yield 177.3, you're down to about a 14.8 billion bushel corn crop, 1.8 billion bushel ending stocks to use, about 12% instead of 14, and prices closer to $4.75 to $5. So I think they call people that are over optimistic sunshine pumpers. So I don't want to be just a sunshine pumper, but the point is that with heat coming on, I give it it's a coin flip as to whether this continues with such great conditions on all the way out to the end of harvest. And I'm saying there's at least a 50% chance of something less than what we have now for production and prices from 450 to $5 and going higher. So I guess it's one of those situations you make a statement like that, and then if you're right, you'll tell everybody what you said. If not, you hope that they don't come back and listen to it and review it. I would say also for wheat, I'd go with about the same percentages, about a 50% chance that USDA's 52 bushel an acre record high, that we actually get that. However, we're coming into August, hot, dry conditions, right during reproductive stages for soybeans. So in my own thinking, 30% chance that we come off the record yields that the USDA has, closer to 51, 50, something like that, even possibility being lower if we really turn desperate. And so instead of the 1110 that the USDA is projecting in their August set of numbers, I'd be looking closer to 12 and a half to 13, something like that. So uh, so uh, people will look at that and they'll say, gosh, that's optimistic given what we've just viewed. But we haven't viewed any of the heat that we have coming yet. And so I think it's a coin flip, a 50% chance that what we have right now will carry us through into harvest. But there's still a lot of probability of us not ending up at these lofty production levels and prices moving a lot lower. And prices responding, pardon me, somewhat higher and giving some people some better selling prices.
Dan, I appreciate you taking the time to join us today and give us our grain market update.
Thank you very much, Shelby. I appreciate the opportunity.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but stick around because we have more for you ahead.